I'm Jess, mom of two, real estate expert, and lover of a good color-coded planner.
I'm Erin, mom of three, real estate strategist with a PhD, and the numbers nerd who's never met a market I didn't love.
We're best friends, business partners, and co-founders of the Highland Group, where real estate meets real life.
And this is Best Business Partners, the podcast where we talk business growth, partnerships, motherhood, and all of the mess in between.
We'll take you behind the scenes of building a brand, navigating life as working moms, and what it really takes to grow a business with someone you trust.
If you're into real estate, entrepreneurship, or just need a weekly dose of unfiltered friendship and laughter, you're in the right place. Let's do this.
Hey, it's Jess and Erin with Best Business Partners. We're here with the one and only Stratton with Stratton Mortgage.
Woo-woo.
Welcome.
Hey, thanks for having me.
He's also known as Farmer Ed now.
Oh, yes.
If you're
Slowly
following him on
learning.
social media, he's like cutting goats and shit and all kinds of crazy,
goats?
like playing with them and following, not cutting them. Like he's
not eating
he's
goats.
not sacrificing anything.
Wow.
He's not
I
there.
was like,
My
wow.
bad.
But if you want a baby goat, you can have one.
Yeah.
Like, I'm not a goat guy.
Well, that's
Definitely
kind of
like
where I was
cows.
going is like he's reproducing left and right.
It's just not me
and
anymore.
just not you anymore. I was just gonna say you stopped at the. How many kids do you have?
I have 5.
5 children.
Oh my
He stopped
goodness.
there and
Yeah.
he decided to get a farm.
Yes. And then everything in the farm just keeps getting pregnant. So, like, I've got
So your
pregnant
wife
Highland
said,
now.
"I'll get your ass. Don't
Yeah.
you worry. You're
You
gonna
don't
cut
have
me
more
off."
kids?
Well,
Yeah,
I'll
you'll have
get
goats.
you.
A lot of goats. A lot of goats.
she's
Good
a
for her.
smart woman. She
Yes.
got what she wanted. I love
did.
it. I know. I love watching it. It's hilarious.
And don't you love it? Fresh eggs.
It's
Are you
fun.
milking the cows yet, or
So I've milked a goat. That's
Milked a goat.
that's
Okay.
not my thing. It was a
Yeah.
fun experience with my
No.
son, and he was cracking up laughing.
Well, I can tell you, I went to a listing appointment the other day, and they have goats, and she made me homemade goat milk ice cream.
Okay.
And when I tell you, okay, so I'm a little freaky, so I was a little like, but I'm like, I'll eat it, sure. I mean,
I wish I
it's a
could have seen your face
$750
when
thing,
she-
I'll do it. And, it was
wait a minute.
phenomenal.
I want to just back up here.
The best face was Max.
I-
Max had a better face than I did. Max is our photographer, and he was with me, and we were all having our ice cream, and he's like,
That's brave.
Goat's
and
milk
his
ice
little
cream.
face was like, he was scared, and I was nervous, but I thought I could
I
fake
wonder what
it.
she'd
I'm
do for like
pretty
a $5 million listing. We'll have to find out. We'll have to.
Someone give her a $5 million listing so we can find out.
good. What'd you do for $35 million? You really want to play that game?
Yeah, well.
Okay.
All
Anyway,
right.
so tell us
Here we
about yourself, Ed. I kind of got off track. Tell us about your family and what you do, etc.
Yeah. So married, got 5 kids, and we decided to move down to Florida 3.5 years ago, just because we loved it, always wanted to be here. Moved down from Delaware.
Delaware, yeah.
Yep. I've been in the mortgage industry for 8 years. Absolutely love it and helping people. So we moved down and we bought a house on the water. I thought that was life for us and we were going to love it, and decided we missed land. So we bought a little farmette. We're slowly kind of fixing it up, and we've added animals. So I started out with 6 goats. They keep getting pregnant. I keep getting rid of the males, and it's like the Virgin Mary. Like, I don't even have a male on the farm, and they get pregnant. So we've got 12 goats now.
Oh, wow.
We've got a mini Highland, and then we have 4 full-size Highlands, and all 3 of the females are pregnant. So
Oh
we'll be
my
having
goodness.
mini Highlands
You
soon.
weren't kidding.
But yeah, I mean, it's like fertile acres out there. I go on
You
the,
should totally name it that.
I get a vasectomy and go on the practice field for the rest of my life, and everything else gets pregnant. Like, I just can't calm it down out there. But yeah, I'm in the mortgage industry, work for Stratton Mortgage, and absolutely love it.
Yeah.
And yeah.
And so you still have an active business up in Delaware.
Yes. So I go back to Delaware like every 6 to 8 weeks.
Okay.
And I've got a commercial building there where my office is.
Nice.
And I probably do about 60% of my business there and about 40% down here in Florida.
Yeah.
And looking to kind of
Love that.
continue growing it down here.
That's awesome. And so you're, besides having the farmette, which I love that, did you name your farm? Besides Fertile Acres.
We've
The
joked around and called
official
it Fertile Acres, so
Fertile
we don't
Acres,
have
yeah.
a formal name
Well,
yet.
every farm has to have like an official name and a
Yeah.
sign, and you
I
gotta
know.
you gotta be legit out there if you're
We've
Yeah,
got to
do it
get one,
right.
especially for the IRS.
Yeah. Yeah. Yes, you do. Yes, you do.
Yeah. Good luck
So
with that.
let's talk mortgage, because
Okay.
you have done some of our trickiest, toughest. We call Ed when we really are struggling with some of our clients that they have some unique needs, and you've come up with some amazing products. So let's talk about the mortgage industry and what it's doing right now.
Yeah, so right now, I mean, I feel like one of the biggest challenges is like, how do I afford a house, right? So I think it's really great with some of the different buy downs that are happening where people can get homes. And then this is your opportunity right now because you see all these negative articles out there about Southwest Florida. The market's horrible. It's your opportunity to go buy a house 100%. And get a deal. If you need the seller to help with some closing costs, you can actually get that now.
Right.
You know, if the home's listed for $500, doesn't mean you have to pay $650 to get it anymore, right? You could probably get it close to that price, or you know, if it's been on the market for 60, 90 days, you can get it a little less. So in the mortgage industry, you know, rates, they're kind of hovering in that low 7s to mid upper 6 range. I think we're going to
bad. I mean, that's really relatively low. You can't borrow money anywhere else on anything else at that rate.
Yeah.
So people say, oh, it's kind of high. We're never going, I shouldn't say never. It will be rare that we go back to see those 3% again. So 6 to 7%. In my mind, when you look over 25 years, what that mortgage industry has done, we're still relatively low. We're below the median of the last 20 years on the low side of mortgages.
Yeah. Would you agree that 5% is going to be our new wonderful low? If we get it.
Yes. I think if you see the 5s, I think that's where you're going to see the market explode.
Yeah.
You know, we've had like some little glimpses where it got to like the upper 5s early in the year and the market went crazy for a couple weeks. So I think in 2026 is where we'll realistically see a little bit of that movement. I don't expect to see the 2s and 3s. If we do, I'll probably not be able to come on a podcast again because I'm going to be so busy, right? We all will.
Yeah. Or we'll be sheltered at another pandemic. So there's that.
Right.
Yes.
That's what it's going to take.
That's what it's going to take.
Crazy.
It would take some kind of major meltdown or something to happen for that. But realistically, I think we will see the 5s again.
Okay.
Hopefully maybe see the upper 4s, something like that. But in the 5s, like that's kind of the sweet spot if you have a market that's more of a buyer's market, right?
Right. So what's going to happen then when we see the 5s, we're going to have the influx of people coming back into the market, which is going to drive your prices back up. Correct. We always say, date the rate, marry the house, because you can always refinance. So buying when the prices are low right now, it's just a great opportunity to pick up property.
And I think it's just smart to like figure out what your budget is. Like throw the rate aside, everything there. Like you buy a house not because of a low rate. You buy a house because you want that for your family, or you want that second home that you can go down to. Like focus on that why, and then find what fits your budget. I think there's a lot more homes that can fit the budget because of where the prices are kind of like they've softened. Like we're not crashing, but the prices have come down a little bit and kind of stabilized.
Right.
And you've got a little bit of negotiation power as a buyer.
Right. Yeah. And we're finding a lot of negotiating power as a buyer right now. Yeah. Depending on the property, of course. But what I love most about this market, and a lot of people say I hate this market because they're reading the news, they're involved in what the media is telling them, and it's a mess. But at the end of the day, I have some educated buyers right now that are like, 100%. Let's go.
Yes.
Because I think in the next few months is my peak time, and if I miss that time, I'm going to really shoot myself in the foot.
Yeah. I'm talking to a lot of buyers about look at the 3 to 5 year window, right? If you buy now in Southwest Florida in 3 to 5 years, I think you'll be extremely happy that you made that purchase because you can get that deal now, right? I think maybe the next 6 to 12 months, could prices soften a little bit? Possibly, yes. But if you're looking in that 3 to 5 year window, I think you'll be super happy with it. And I'm watching too, a lot of savvy buyers start to buy. A lot of my investors from up north are now sucking up properties. Like they actually get excited when they see like Cape Coral's the worst market in all of America. They see that and they call me like, Ed, can you give me pre-approved to buy investment property down here? Because they know what it is. When there's blood in the streets is when you get a deal and when you make money.
And that's correct. That it is a very soft market. It is definitely a saturated market, but not necessarily the worst in the country. I mean, we certainly, and we're seeing, I mean, this is a great opportunity. We are having these conversations every single day with buyers.
We find, they're saying, well, it says it's the worst market and all that. At the end of the day, we're still Southwest Florida. We're still sunshine 365. Yeah. We have a hurricane here and there, but we don't have snow. We don't have tornadoes. We don't have everyone days. Has their issues, but and I have had so many people tell me, I'll take this nice weather, sunshine, water, the access to water, the access to oceans in fresh water, and then the weather 24/7.
Awesome.
How do you beat it?
I mean, even the storms haven't been bad. We were out this weekend, and the water was so clear, you could see our feet. I know. Well, no, but our afternoon storms, I mean, boating, we've been out last few weekends, and we haven't had to chase storms, which is normal for us.
Well, and a shout out to Captains for Clean Water, because they do such a huge help with and drive to make sure we're not getting those dumps from the lake and different avenues. And they're working with the state and different people to make sure that thank God, because it is what it is. But
they've done a yeoman's work in keeping our water clean and being advocates for us here in Southwest Florida. So thank you, captains. We've also had them listen to that podcast. We've had Captain Chris on here, so you can check that out. But yeah, no, we appreciate it. And you talked a little bit in the beginning about buy down. So explain what buy down for those people that don't know what buy down means.
Yeah, there's a couple different types. So you can do like a 2-1 buy down where the seller gives you money to buy it down by 1% or by 2% for year number 1. Right. So if you're at 7%, year number 1, you're going to be at 5. Right. Year number 2, you'll be at 6. And then the rest of your term, you'll be at the 7. Yeah. But I like the long-term buy downs, right? So instead of trying to just make my life better for 1 or 2 years, Florida's a little bit more expensive to refinance. I say get that big seller credit and buy it down for the life of the loan. Okay. So if the rate's right now 6.875, you can get a large seller credit. You might be able to buy it into the mid upper 5s. And have that for the whole entire loan and not have to worry about refinancing down the road. So if the market goes up or down, you don't care. You've locked it in forever.
Give an idea of what those numbers look like for a long-term buy down. So if a house is $500,000, what kind of money do they need cash from either the seller or themselves to get that kind of buy down?
If you're looking, let's say today, I just ran a scenario for somebody. They were at 6.75 today, right? And we're going to get a 2.5% credit from the seller, and that's going to get us to 599.
Okay.
Right? Nice. That's not unreasonable to get a 2.5% credit in this market from the seller. We're able to use that to buy it down to 599 for the life of the loan.
Okay.
You know, that's going to save them a couple $100
of $500,000 to buy it down. Okay. And that's a seller credit closing cost. So,
correct.
Yeah. And those are just negotiating tools that we use all the time. Like when we're going in and we're asking for them to fix things, or I tell people all the time, I want you to look at the long-term money. So if somebody says, I want $10,000 in credit. Okay, well, take that $10,000 or $20,000 and buy down your interest rate and do the repairs yourself.
Yes.
I mean, don't do girl math because like, oh no, I need the $10,000 to fix things. Well, amortize that over your 30 years of what that interest rate is going to cost you.
Well, and one key thing is it better in this scenario? And every scenario is different, so there's no blanket way to do it, what right or wrong. But in this scenario, is it better to take the higher loan amount and the buy down, because then your payment's going to be significantly less?
Right.
Or is it better to cut your loan amount and not take that buy down? And I love showing it on paper to these people because it's eye-opening. It's when you don't do real estate every day, you don't get it.
Yeah.
So I get that. So it's spelling it out for these people so they see it in different angles.
Yep. And I think
they can make their
it all depends on the client on which one makes the most sense. But I always talk to people really simple, right? So if you had $10,000 less in your bank account, would it bother you? Yeah, you're going to notice $10,000 less. If your payment is $60 more a month, which one matters more? $10,000 less or $60 more a month? And we kind of walk through that. We do that when we're asking for seller credit to pay closing costs versus getting the absolute lowest price on the home. You know, that $10,000 is about $60 a month in monthly payment. So you get the house for $10,000 less, you save $60, but you have $10,000 less in your account.
Well, that's one thing we love about working with certain lenders that are willing to sit here and say, this is the best case scenario for you. I mean, it's so easy. We get busy. It's just like rush through the scenario, rush through the client. Here's it on paper, take it or leave it. Right. Yeah. And I'm not saying that's what people do, but it's easy for us to do that. And we take for granted that they need us to sit down and walk them through things so they can, one, understand it and make the best decision for them. Because the one thing we do not want is in a year them calling us saying, I can't afford this house because you told me to do this versus this.
Yeah.
So, and it would reflect on all of us.
Yeah.
So one of the positives is that we have you to take that time to explain it to the client.
Well, we try and stay in our lane. Like we try.
100%.
You guys do a great job.
The house. Yeah. And that's where we call Ed and our lenders in to be able to explain. And we like to give them options. Like, we'll tell them to call you, call another lender, check with the credit union. Because you all offer different packages. You all offer, certain things, and certain things work for certain people and don't work. But we love, because you are so great at explaining and at offering different things. I think you come up with a lot of non-traditional loan options. So you want to share some of those non-traditional loan options, especially for investors? I think there's some new things out there that you've done that are super creative.
For investors, we've been doing a lot of DSCR loans. So that's debt service coverage ratio loans. And the way those work are, if you want to go buy a house for an investment property and you put 20% down, we're going to look and say, is the mortgage payment less than the monthly rent that this house is projected to get? If the answer is yes, and you have qualifying credit, we'll do the deal. Right. That's nice for that investor who they might be self-employed, not show much income, or they've got a whole bunch of investment property, so it looks like they're losing money on paper, right? Because we don't want to give it to the IRS, because then it's gone, it's burned up. So it's just simple. We look at just that property, and does this deal make sense? Does it cash flow? If it cash flows, we'll do it. Investors love that because it's quick and easy. And then a lot of bank statement loans, right?
Yeah. Are you doing a lot of those?
A lot of bank statement loans. I feel like COVID was kind of like everybody became self-employed out there.
I was just going to say, because the self-employment rate is up right now, and we're somewhat cash insulated. So a lot of investors that are buying, so those bank statement loans. So tell us a little bit more.
Yeah, so a bank statement loan, we're going to look at 12 months of your bank statements, and we're going to average those deposits. Depending on what kind of business you're in, we're going to give you either 50% all the way up to 75% of what those deposits are to use as income. So I have people all the time that come to me and they're like, my lender said I don't show enough money on the taxes, I can't get a loan. They're like, I have good credit, I've got 20% to put down, or I've got 10% to put down. So we go straight to the bank statements. And I tell them, send me 12 months of bank statements. A lot of times those people have plenty of qualifying income right on their bank statements. And the interest rates, if you have good credit, they're really, really similar. Yeah. You're talking maybe 0.25% difference.
So are they still looking at the tax returns on those? No. They're not even looking at them.
No.
Wow.
All I want to see is that you own your business, right? What percentage ownership it is, and then 12 months of bank statements so I can see the money coming in. Okay. And that's how we look at those deals.
And what would be, is there a difference in rate, difference in fees? How does that, there's got to be something there.
The fee structure is pretty much the same on those, but the interest rate, let's say if you did a fully income qualifying conventional deal, you would have got 7% today. You'd probably get 7.375 to 7.5 on a bank statement,
not killer.
Which is not killer. Yeah. And a lot of these people, they just want a house.
Jess's wheels are turning over there. She's like, maybe I'm buying more property.
You guys know it's the time to buy stuff right now.
It is the time. It is the time. And and you do just commercial?
So we do a little bit of commercial. The nice thing is we're backed by a bank. So there's been a couple deals that we've done for you guys that nobody would do them. They make sense on paper to do the deal, but maybe it's in a condo complex that's got pending litigation or something like that. Yeah. The bank will actually look at that and make common sense decisions of we're okay with taking this risk or doing this deal here.
And the new law that came out and being able to depreciate multifamily, which multifamily people say, oh, okay, I'll buy a duplex. It's really 3 or more, so it's really a quadplex that you need to look at to fully depreciate. But you can depreciate that whole thing in the first year now, which is pretty much, love that.
There were a few huge key items on that beautiful bill.
Yeah, that was a beautiful bill.
Was helpful for real estate.
Most definitely.
And it actually has a lot of benefits for low down payment loans where you can write off that interest and write off your different fees that are associated with it.
Yeah.
So it'll be interesting to see how that plays out over the next couple of years.
I was going to say, what is the implementation? Have you seen any implementation of that yet or not?
Not really yet. No, just kind of here's all the data, here's all this, read through it, figure out how it benefits. But there are some different things with the SALT tax and the changes there that it looks like it's going to benefit homeowners. Whereas right now you capped at $10,000 for what you can write off. And I believe that cap's been raised quite a bit.
Yeah,
significantly.
Yeah.
So that's great. Sometimes when they operationalize these bills, they don't match what their intent was on paper. So I'll be interested to see how that goes.
I want to see how it all plays out.
Yeah.
So
interesting.
What other tips would you give home buyers in this buyer's market right now, Ed? Besides use you.
That's the biggest one and the easiest one. No, so just really have a plan. Meet with the loan officer in the beginning and really develop a plan of what you want to do. Yeah. Shut down the media and all the fear that's pumped out there and do what's right for you and your family or your personal situation. Huge advice for retirees, right? They all come down and they want to pay cash for a home.
Yeah.
When you're a retiree, you're not in the accumulation phase. You're no longer growing your assets and increasing those balances. So I really suggest talk with a financial advisor and a loan officer and look at taking a mortgage out. You can pay it off with no penalties at any point, right?
Most of them.
Almost all of them you can. You can't accumulate that cash. You come down here and you buy a $500,000-$600,000 house cash and you got $50,000 left in the bank. That's what you have for the rest of your life. You're not going to accumulate funds. Whereas take a small mortgage that you can afford and you're comfortable with and have that cash. You can still get 4% on a savings account right now. You can depreciate it, take those benefits, but it's a mistake I watch a lot of people that retire make.
Yeah, it's true. It's true. And we're a cash insulated area. We know that we have a higher volume of cash than anywhere else. So, and I just saw, of course, it was on social media, which I don't take for news, but they were talking about our our economy in Florida is one of the best in the U.S. right now. So I'll have to do some more digging, to find out where that source came from other than TikTok. So,
well, the first issue I have here is that you're not taking that as a good form of.
I know.
TikTok is everything.
Jess gets all of her media, and it is true. If she saw it on
You don't have to
TikTok,
fact check it.
If it's on TikTok, it's true. Facebook, for sure. I mean, why watch the news? Have y'all watched it? It's so depressing.
Yeah. Yes. No,
TikTok, at least every now and then I get a little fun, like mama fighting son, or they got arrested coming out of Walmart,
it's way more interesting than
shoplifting.
Mine is like the Wall Street Journal.
You got the Florida man on yours.
Yeah.
I like it. Don't knock it.
I do want to see where that source came from, but I would be really happy if we could verify that. And I do, it leads to where we're at in our industry because we are cash insulated. We have a ton of cash buyers. Mm-hmm. I think that's great advice for people retiring, though. I think the depreciation is always huge. I have been in the habit in the past of just doing things cash, but you can't depreciate it. So you can't hold on to that cash.
Yeah.
Great advice.
If you had to say one thing about your farm that you want everyone to know that you've learned since you started farming, we're using the word farming loosely.
Yeah,
it's very loosely. Very loosely.
What you've done in the last year that you've learned that you could fix or not do again or help somebody out that's thinking about doing it. We have lots of people call us all the time. We want to have animals. We want to have chickens. We want to have this. Okay. What would you tell them?
Do not buy goats first.
I think we had that conversation before you bought a goat.
I heard your wife saying you're doing
you and I talked about that.
Oh, no. I mean, we got to make some money back on these goats. I've been taking them to the Arcadia small animal auction and just, you take them in there and they're like, well, do you want to put a reserve on this? And we're like, no, just sell it. I'm like, okay, we'll send you a check in the mail. But goats destroy everything. They get out. They're escape artists. I like cows. Like, it's cool. I'm going to be buying beef cows next. But ChatGPT is your best friend. It can literally teach you how to do anything on a farm. It's not that hard and complicated.
Farmer ChatGPT.
Yes, that's my farm hand. He just can't move stuff around or do anything. The brains of everything.
Lazy.
Yeah, he's the brains.
Smart but lazy.
Oh, see, you could have a reality show.
You could.
Really should. Yeah,
it would be fun.
That's too good. Well, thank you for joining us.
Yeah.
Thanks for having me, guys.
Yeah, we appreciate it. And we are Jess and Erin with Best Business Partners. Thanks, Ed Stratton. How can they find you?
You can find me on Facebook.
Yeah.
Ed Stratton. And you can also find me at www.ed.stratton@tg.com. Oh, I killed
Something like that.
No,
you did. You did good. Okay.
I absolutely messed that one up.
We'll put that up there for you.
It'll be in the notes.
That's a good blooper. Just drop it down at the bottom.
We'll drop your phone number down there at the bottom too, so you can get a hold of Ed for all your mortgage needs. We are Jess and Erin with Best Business Partners. Old Florida Dream Team, powered by the Highland Group. Call us for all of your real estate needs, commercial, luxury, land, you name it. We don't do it all, but we will do everything you need in real estate. So thanks for listening, and follow us on social media at Old Florida Dream Team, Highland Group. I think we're on Instagram.
She's rolling.
Facebook.
Join us. Thank you.